Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, this coronavirus, so many people are saying their supply chains dip deep into China. What happens when they start shutting factories?
Oh, yeah. I got a taste of it today. I actually purchased a product through a crowdfunding product or website, and they sent out an alert today saying, hey, just so you know, our factory is shut down in China, and everything's on hold until things get back. So it's amazing how small and big this is really affecting everyone. Tiny little companies, big companies. China is kind of the heartbeat in terms of product and globally. So, if they start shutting the doors, it's just going to wreak havoc, as long as they don't shut for too long. But, if things start shutting down for 2-3 weeks, maybe longer, it's going to get pretty bad. And we're going to start to see it hit the bottom lines, on the next round of earnings for companies, and obviously going to be lacking in product. Eventually the sales will kind of kick in. So it's going to put a big, I think, a pull down in the equities market, but I think there will be a little bit of a delay. I think everybody's over the big fear that there's something starting that kind of hit the market. We saw stocks correct and sell off, but now it's going to drag out, I think, in terms of how big is this going to become. And I think later, who knows, a week or two from now, things could be dramatically different. And that's when I think we might see it affect the markets a little bit more. But every dip in this market is getting bought up, and today's another big update for equities, and it's trying to, put its foot down and say, hey, I don't want to fall. I want to keep going higher.
Are the markets getting a lot of outside support, say from the Fed and other central banks?
Yeah, I think they are. The Fed and the repo market, they just keep feeding the market with money. Today's another big day. I think it was $30 or $35 billion dumped in the market today. Like, it's just never ending, this money stream that keeps piling in. It's a big update today. But I think it's got a lot of people really excited about the market. This is a pretty strong rebound, but in terms of the short-term price action, we saw a price like this in August. We saw a similar price in September, October, where the market sells off, and it ends up trading in a big range like this, where the market goes from oversold like it was 2 days ago to extreme overbought like it is today, and it can go on and do this for 2-3 weeks at a time. So it'll be interesting to see how the markets handle the next 2 or 3 days, because right now the market has popped and it's trading at this extreme kind of overbought market condition. The Fed is pumping money in, so it's getting a really big lift, but can it hold that, or are we going to see a huge drop like we saw 2 trading sessions ago, where the market just collapsed and kept on selling off, and everybody thought it was the end of the world, the start of the next huge bear market, and here we are, ripping to the upside 2 days later. So it's going to be really volatile, and I've been telling subscribers, just buckle up, let the markets do their thing. They could trade in a huge sideways range that is going to have everyone really emotional and trading off pure emotions, and going to be caught on the wrong side more times than not if this keeps chopping in these big ranges. So you just got to be aware that I don't think this volatility is over. I don't think we're off to the races and going to see the markets head higher. I think we're going to see some continued big sideways chop. And today's got that feeling that everybody's piling into equities. Everybody's like, we're back into a bull market, and I think we could see this get sold into in the next 1 or 2 sessions, and everybody will be scratching their head getting sucked into this kind of bear trap potentially. So it's a tough market to trade as a swing trader because it could be sideways here with very big percentage swings.
Chris, is that what you tell your clients? Trade with your heads, not with your heart, which in this case would be fear?
Yeah. It's really interesting because when the market has these huge moves, like 2 days ago, I've created some custom indicators that allow me to kind of get a gauge of panic, fear in the market when people are trading pure off emotions and they're not trading with logic. And those extremes give us really good tradable setups. And we had that 2 sessions ago. Today we've got the opposite. Everyone is piling in to the equities market, and we're seeing the exact opposite of what we saw 2 days ago. Today on the NYSE, we're seeing 8 shares being purchased on the ask to every 1 share being sold on the bid. And when that ratio is over 3, it means there's panic or greed buying. Everyone just wants to buy. They don't want to miss the next rally. And here we are almost 3 times that today. So it's a really emotional day for people. People are chasing prices higher. People are covering their short positions. They're just, they have to buy in the market, and it's just really their emotions sucking them in at this point. And they could get chewed up and spit out 2 days from now and be like, wow, I shorted on the low 2 days ago. I covered at the worst, highest price today, and then here they are. They would have been in the money 2 or 3 days from now in a big way. And that's what the market loves to do, these emotional, high-volume swings in the market. And it's really tough to trade because the problem is a lot of people over position size. They have way too big of positions. They use too much leverage, and that's why they get emotional because, there's these 2 and 3 times ETFs. When you get a 3% or 2.5% update in the market, that's 7.5% potential in one day, a move against you. And if you've got 50% or 100% of your portfolio, which, believe it or not, a ton of people do in individual trades, they can't handle that stress and that amount of loss, and they have to eject out of the trade. So this type of price action chews up the average trader who doesn't know position sizing and risk management.
We'll have more with Chris Vermeulen right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with gold with all this coronavirus panic?
Yeah, gold's been doing really well the last couple of months. The last 2 trading sessions, though, we've seen it take a nosedive. The U.S. dollar's had a really nice bounce and move higher, which I think has helped put a little bit of a downward bias in gold and silver and mining stocks, but they're still holding up. Gold is still looking very good. It's selling off today, and it's getting down towards a support level, and hopefully it'll find some support here and consolidate because it still has a very large bullish pattern, which points to much higher prices in the future, but it doesn't mean it's going to happen right now. It means the bias, these dips, these pullbacks can still be bought at this point, and we should see price rally we're looking for about 1750 on gold. Right now it's trading at 1550. So there's some pretty good upside potential in gold, and this is more or less seen as an opportunity at this point. It's oversold today, and really today is a big shift of money moving out of these safe haven plays that people are They don't want to be in them because they want to get into the tech stocks. They want to get into equities. And so everybody's just kind of moving out of bonds and metals, miners, and moving into gold or into the equities market today. And I think it's just a kind of a panic motion. Everybody's just starting to kind of trade like a school of fish during these emotional times.
We'll have more with Chris Vermeulen right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, OPEC is meeting to decide what they should do in the face of the coronavirus. Is there a lot of movement in oil right now?
Yeah, oil has obviously been selling off for a month and change, and yesterday it broke down below a significant level, which were the lows from last June, July, and August, and even back in October. We closed below that level. Today, oil was actually up 2.5% at one point this morning. It rallied all the way up to that breakout zone where it broke down from, and it kissed it, and then gave it a kiss goodbye. And we've seen price continue to fall and drop, and it's moving lower again today. So it looks like oil has failed support, and the next stop for oil is really 42 or 44. That's the next level. It should have a significant bounce, which is quite a bit away from the $50 it's trading at right now. And I've got a longer term target down around 33 eventually. But overall, this big pattern in crude, it's a year-long pattern has been playing out. It's starting to break down as of yesterday, and things could get pretty ugly. Obviously, I think this virus is going to affect a lot of different things, and it could end up being good for oil. Simply down the road, if production has to get cut and it stalls out. But at this point, this virus seems to be pretty negative across the board.
What is going on with Bitcoin right now?
Well, Bitcoin is it's starting to rally, starting to build it formed a big bull flag since really July when it topped out, June, July there. It's formed this large bull flag, and now it's crawling itself out of that level, and it's rallied up to its previous high that it made back in October, November, and it's just starting to pull back. Now, overall, it looks as though Bitcoin has bottomed, but until it closes above that October and November high that it put in there, which really is only about $400 away from where it is right now, once it breaks that, it will be in a new bull market. And you and I talked about this a while ago, that the next upside target based on these patterns is actually around the $20,000 mark. So we could see it go back up and test those all-time highs. It could put in a big major top at that point, or it could blow through them and continue to go higher. But Bitcoin has a very bullish chart long-term, and it is pointing to higher prices. And at this point, it's on the early stages. It's on the cusp of breaking that more or less $10,000 mark, and then it's off to the races to double up to around the 20,000. So it looks really bullish at this point. And, people are moving into it, and the patterns are all there for much higher prices.
Is Bitcoin now been around long enough that a technical trader like you can take a look at it and say, this is the kind of action we expect over the next 3 or 4 months?
Yeah, I totally think so. I think it moves a little bit different, just the way that, in the reality is it's very thinly traded. But overall, it still has price action that looks like any other stock or index, and, it still moves more or less the same. It's pure emotions. It's what it is. The chart just shows you user demand and And all the stock chart patterns that you learn in books and trade with stocks and indexes is the same thing. And in fact, Bitcoin's had some of the nicest patterns unfold. It's just some days it opens up or down 10 or 20%. And I'm not a huge fan of things that will move that much in a day or two. It's definitely a higher risk type of play, but overall, it is a great trading vehicle for those who are good with handling high volatility. And obviously, you need to trade smaller amounts with it, but it's still a great trading tool for those who want to take advantage of Bitcoin.
Chris, how would you sum up the markets then for the week?
Well, I think this is a week of more or less trend kind of. It's going to be a week where we find out if the stock market is in rally mode again or if we are in a big sideways chop. So over the next 2 or 3 days, we're going to see if the stock market is going to be selling back off again and if the safe havens are going to have strong bounces. We've seen this type of chatter before, huge volatility in price on the indexes, up big one day, down big the next, and the safe havens do the same thing. Bonds are still looking really good. They're showing that big money is moving into bonds. They are concerned that the equities market's going to sell off. So to me, this is a week of high emotions, lots of volatility in the market, and I think next week will be kind of the week where we see potentially new trends kind of take hold and or continue, and then we can get back into focusing on some new trade setups. But this is a week of chatter and really kind of higher risk trading. If somebody was to try and get in this week, it's going to be bouncing all around. So I would take it easy, watch the volatility, keep positions small, and once we see some type of pattern and big breakout or breakdown in the equities market, that I think will be the point where you can start to deploy some new capital either into the safe havens or to the risk on equities and pick those trends, because the trends are more likely to continue than they are to reverse. And at this point, you just got to sit tight until they pick a trend and break up or break down going forward.
Chris, thank you so much for being on the show.
Hey, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.